Hi there, I am Kulula Mutwa, your host, and this is Property Market Moves. And in the hosting table, I am joined by.
Drum roll. Ayanda. My name is Ayanda Makaza, and I chair the Cyber Women's Forum.
All
Pleasure
right.
to be a co-pilot.
Yeah, man. Thank you. Thank you for coming. We are talking to Palesa Ryan from the DBSA. So we recently, this month, right, we celebrated International Women's Day. And we thought, it would be great to have a women conversation and see what is happening out there. Hi, Palisa, how are you?
Hi, thank you for having me. I appreciate it, especially like you said, for it to coincide with International Women's Month. Normally, we leave these women-only conversations for August.
Yes, exactly.
Yeah. And we should spread them out because, there's just so much to
Yeah,
unpack.
It's a consistent message there, yeah.
100%.
All right. Who's Palisa Ryan?
Palesa Ryan. So I'm from the DBSA, and it bears mentioning that first because that's of course is the propeller for my being in the seat as far as this conversation is concerned. I'm a banker, having been in financial services now for 22 years. I celebrate that this year.
Wow.
Principally in the credit environment, in particular business support and recovery. So that's your distress lending. Have covered a number of sectors, mining, agriculture, retail, industrial, and of course, property finance now, which is my portfolio at the DBSA. At the DBSA, I'm responsible for social infrastructure, and that's funding projects in housing. That's affordable housing, social housing, student housing. We fund education projects. So that's your schools at an education, your schools and education projects at a primary, secondary, and tertiary level, as well as healthcare.
Okay.
Being both primary and right across to tertiary, and ICT in those sectors that I've mentioned.
Okay. It's quite a broad portfolio.
Yes.
Okay. Yeah. And how would you then map your journey, having come from probably just more of a credit background and now working with socially impactful products at the DBSA?
Yeah, that's an interesting question. I did not anticipate that. I think a lot of it, as a base, probably relates to my family background. More so in my maternal side of the family. My grandparents were business people. But I remember, in as much as they were business people, they were very big esontweni and in the community, where my grandfather used to give like allow people credit, and even like donate food, and people used to come to my grandparents' home for resolution of issues. He was actually the mayor even of Ezakeni, and so was my uncle. And I even saw that in my mother, where she was a teacher, but also very involved in our community. So I've always had that orientation from growing up. But of course, being a black child, growing up isn't easy unless I suppose you're from a privileged background, which I didn't have the advantage of. So it was always known that whatever I'd have to do professionally, it would have to pay the bills. And so that's how I ended up in finance. So I had a bursary from Deloitte and Touche. I went to Wits, started off my career though at RMB. So I've always been in banking. Also had some stints at some private equity firms, investment holding companies. Okay. So really enjoy corporate finance as well. But then was more in banking and in credit, which resonates with me as a naturally risk-averse person.
Yeah, okay.
And then my last role at a corporate and investment bank was at ABSA Group, where I looked after the non-banking financial institutions portfolio for Africa, excluding South Africa. And there I became very mindful of the impact that funding can provide, especially in markets where access to funding is challenging. Yeah, and then I moved to Land Bank back to because I wanted to be a more technical again. I'm moving away from coverage, but it just felt too small. Focusing only on the SA book because of their mandate. I then found myself back at DBSA, and specifically in this role. And what I love about this role is you really are able to see at a grassroots level the impact of the work that you do in terms of providing people with housing. And I think COVID-19 really shone the spotlight on how unequal a society is.
Sure.
When you ask people to isolate, and then the quality of the homes that they're supposed to isolate in, and even education, where our children perhaps were able to access remote learning, but many of the children in this country weren't able to do it that then, and sadly 5 years later still can't.
Sure.
Similarly, our healthcare system, like how do we provide infrastructure, not just infrastructure, but services, because it's very much outcomes based, right?
Sure.
It's yes, you've got healthcare, but does it deliver the health outcomes, which is preventative outcomes, as well as like cheaper and more longer
secure product. Okay, so
exactly.
I think that's great.
So for me, it's yes, the provision of funding, but it's feel good. It really resonates with who I am as a person. So there's no having to divorce myself in terms of what I do to make money and who I am.
Okay.
So I love that.
Okay, wow.
Yeah.
I mean, that's kind of well set out. And perhaps maybe that leads to my next question of if you have any interesting or stories and experiences now, with the work that you do, that kind of speak to that impact and that outcome that translates societally.
Yeah. No, 100%. I mean, one of the projects that we've had a privilege of funding is the Future Nation School, which is owned by Dr. Sizwe Nxasana.
Yes.
I mean, that school, if you look at the curriculum, it's very future forward in its way of thinking. It's follows a project-based learning formula of learning, which is quite holistic, especially in terms of then how you get your children to think. From an ownership perspective, it's 100% Black owned. Dr. Judy Dlamini, Dr. Caesar's wife, is also part of the business. So then it speaks to the Black female ownership. And I mean, I don't have to speak to you ladies. You can appreciate how we don't see enough of those businesses coming through. And then even when you look at the beneficiaries, looking at the student population, it's 99% Black.
Okay.
And even the fee point, if you look at the fact that they have coding from grade R, which is your early childhood development stage, they have robotics, and they're able to come in at a fee point which still falls within the affordable band.
Inclusionary bracket, okay.
100%. Another one that we are looking at is Alma Clinics. They actually have a clinic close to where I live. It's a primary healthcare facility, also very affordable. They have an app-based platform that you can use to book appointments. You can track your journey. Again, 100% Black-owned, majority Black female-owned.
Right.
So those two come to mind.
Powerful stories.
Sure. From a DBSA perspective, what does gender inclusion look like? And now thinking property sector or built environment industry.
So, I mean, if one considers who the DBSA is, we certainly are broader than social infrastructure. We also fund projects in economic infrastructure. And by that, I mean projects in energy, projects in logistics, and ICT, as an example, water and sanitation. So we take a very comprehensive view when we talk about applying a gender lens or gender mainstreaming. It starts in-house from how we look at our recruitment process. I actually sit as the deputy chairperson of the bank's employment equity and skills development committee. So I'm very, I'm very passionate
on the ground.
Exactly. Because you have to be part of the, if you have a problem with something, you have
to be part of the solution.
You have to be part of the solution and be able to hold your principles to account. And fortunately, I work for an organization that is open to those conversations. So it starts internally in terms of how do we recruit? How do we have a workforce that is representative of the country, as an example, that we operate in? Because we've also appreciated and seen that infrastructure doesn't necessarily speak for the full demographic. Look at public transport. And I mean, I often find myself sitting in meetings with project sponsors and consultants, and it's all men.
Okay.
And has anybody considered what it's like, a journey for a Black female having to get somewhere, or female, or a child, like the steps to get into a taxi or a bus, the toilets, security. So it's very important that we apply this in our thinking. And that even goes to, again, when we talk about the project sponsors, because when you've got, and this is why diversity is so important. And often people look at it as a bugbear. It's so that you can have all these different applications, spectrums of thinking, exactly, so that you can come up with a solution that is optimal. And what I find also helps us in applying our minds is that the pools of funding that we also have access to are very mindful of this. We also borrow from Europe, and gender mainstreaming is key to them as well, in terms of who the beneficiaries are of the projects. And we find in our sector, if you look at housing, to bring it then back to property, if you look at the affordable housing space, 80% of beneficiaries are Black, and 60% of those are women. So there definitely is an alignment when one considers that.
Okay. Sure. And I mean, I'm just thinking about in our hub, right? Skills development is one of those, big things. And as you're talking about, starting there with how you recruit, in that pool, it's a relatively small industry. You see similar names moving from organization to organization. So when you speak asset managers, then you'd probably just have this one person. Or in property finance, how easy do you find it to be able to recruit from a wider pool? I mean, when you are recruiting at the bank, like looking at females specifically.
Great question.
That is a great question. I mean, it was a challenge to the extent that I was fortunate to have a group executive who, when I joined, there was a vacancy for a principal in my team, whereas the other roles were filled. So he wanted the incumbent coming in to then have the benefit of picking someone to join their team that they would have wanted. And I looked for a year and a half.
Wow.
With that vacancy, which obviously meant more pressure for the team in terms of having to work. But also, like, I find it a fallacy, this narrative that there is a scarcity of resource. And even if you look at the Labor Act, it does make provision for certain groups from a recruitment perspective. It's Black female, it's youth, and it's people who are differently abled, as an example. Because also it can be quite systemic, because like you're saying, it's a small pool if one considers infrastructure, the DFI space, and certainly even property finance. So you find that the men tend to rise up to the top a lot easily, and I think that's across the board. I've worked at all 4 banks. There's nothing different there either. And a lot of this is about exposure. And so because people are exposed, they then get to learn more. And then when people start thinking where the scarce resources are, where the rare skills, they then tend to push the same people, the same gender even. And I have a view of people can be capacitated. And so upskilled. So as long as somebody's got a good head on their shoulders and they have experience, the rest they can learn on the job. And in fact, that person that I waited a year and a half to recruit, within a year and a half in my team is now also ahead.
Oh, okay. So,
which then opens
stage
and
kind of
exactly, and that was a woman. So it's
good dividend.
Yeah.
And my other question also quite related to the issues of the structural and systemic issues in the industry is, even with the financing, do you find that, though you are looking for women and intentionally have inclusionary products, but are you finding that women are responsive, and do you have a good pool of participants who then come out on the other hand, kind of successful in their ventures?
So we are seeing some applications from women, but if one compares it to Black men as an example, because we do have transformation targets that we also have to meet in terms of supporting Black-owned businesses as well as Black female-owned businesses. The team does very well in terms of the Black-owned marker, but comparatively, where we define Black female-owned as a minimum of 30% plus, not faring as well. So it's a function of, as a base from an application, if one thinks of it as a pond, there are fewer applications of fish representing Black females, as it were. And that's why relationships with organizations like yourselves become important.
Yeah.
I mean, we started this relationship last year, and it's one that I've been speaking to Kulula about. How do we scale it up? Because I know also, Ayanda, you heading up the Women's Forum. How do we become more intentional about finding people who are qualified in this space? Because what I also find with social infrastructure, especially in the housing side, is that there's a perception of barriers to entry being low, so people will try, as opposed to energy deals or even water and sanitation, exactly, where you have to really be, there's less opportunism in those sectors. So what the team and I then look to do is to, from an origination perspective, is partnering with institutions like yourselves who have members in the built environment to say, we are the DBSA, this is who we are, these are the products that we have, and how do we work together? You have a client of the DBSA's NHFC, they're launching an incubation program. Exactly. So I've been having conversations with Uwazola, the CEO, to say, we are lagging behind in funding Black female-owned transactions. And that's a challenge across the sector. How do we use your incubation program to leverage that? And DBSA, as your funding partner, we then assist with coming up with concessionary pools of capital, as an example, to then support initiatives like that.
Okay.
And I was actually going to jump into this incubation conversation because I think for some time, we probably would be averse to even the term, right? Incubation or these support programs, because we were kind of like, no, but, we've been around, we know it. We don't need to be taught. We just want opportunity.
Says we are mentored into.
We are incubated out. We're just ready for opportunity. But the reality is that in different spaces that we jump into, you probably find that there are nuances, right? So you may have come up in certain parts of the industry. But now if you want to become a developer, which is why then we have our
aspiring female
developers program. Because we recognize that just because you have been killing it, maybe as a property manager, does not make you a developer. So there's definitely room, for incubation. So I wanted to just get your sense. I mean, do you feel that we have enough incubation programs, actually? I think from us saying, no, we've had too much incubation, and now realizing that maybe not, because there's still room. You're still seeing less of a pool in terms of funding applications, from certain groups in different platforms. And is it, whilst we've got a vast pool out there that can do other things,
right?
But do we still, do we have enough incubation or support programs?
I think that's a really great question. And I suppose even when one talks about incubation, right, there's a large breadth of what some of those incubation programs are trying to cover. So for me, if you're talking about skills incubation, I think we are skilled incubation to death. Particularly, I mean, as a funder, when you look at a project and you're trying to assess whether or not this is something you would consider, of course, there are the matrices that need to tick the box from a financial bankability, viability in the project itself so that you can get your money back. But first and foremost, it's always the jockey. It's like the sponsor. Do they have experience? So to your point, there may be an Ayanda who's a built environment professional, but once you start talking property developer, it's a broader hat that you need to wear. I mean, I'm a finance specialist and have been my entire career. But I found that if you look at property development, it's such a nuanced space. I'm actually busy with a certificate right now in property development because I speak the numbers, But when we start speaking things like spluma and site enablement, you guys have that benefit. So even within property finance and property development, it's very rare to find one individual who's able to speak comfortably against that broad spectrum of what developing a property entails. So I think for me, what a successful incubation program looks like, having a diverse group of people who, if they were to come together, can find natural synergies where I can speak comfortably to this and you to that. And so we complement each other.
Those ingredients come together. Wow.
That's number one. But also there's a project for them to actually develop.
Yeah.
Because most of the experience that people have is as an employee at somebody else's company and not on a standalone basis. So it would be great to have an incubation program that also has live projects.
Yes.
And then it also brings in the funding. You know, and in my mind, if I'm then backing a jockey within that environment who may not on a standalone basis have done it, but they've got the support of regulators, as an example, of, say, a public entity like a PRASA releasing land, or a municipality releasing land, we come on board as a DBSA with debt funding, as well as our project preparation facility, which is a recoverable grant where we can bring in transaction advisors or where the gaps are missing. That becomes a different conversation. And then after this incubation program, as it were, you now have got a portfolio.
Yes.
So you can come back to fund your next development and you've got a portfolio which has equity in it. So you can even go to a commercial bank. So for me, that's what success would look like. Not training and, you know, financials for non-financial managers.
And I guess that kind of speaks to probably that negative element around the upskilling programs that are there. And I'm quite excited to hear you then touch on those different elements, you know, kind of bringing the mentorship so close to the process that the beneficiary then walks out with tangible experience.
That's exactly it.
And, you know, even an asset to then leverage for the next transaction. And I do believe that's also what we are trying to achieve with our aspiring female developers program. And I think those partnerships are quite strong. And in fact, you know, the more we look to that type of thing, the more we invite even private participation, because I can already see you collaborating with NHFC. Well, is a natural thing to find in your space.
100%.
A partner that does the same thing as you.
Exactly. And then what you bring to the table then is that pool of prospective sponsors that we say the market is crying for, right?
I imagine then it's a similar challenge when we're looking at social housing, which is one of the portfolios that you're looking for. I mean, we know that the social housing space, you know, is grant funded. Are we seeing a enough female pool in comparison to a male pool? And if not, what can we do differently?
So if I think of social housing in terms of like the asset classes that the team funds, we are seeing more there than even the more specialized you know, property transactions that we look at. And by specialized, I mean healthcare as an example. I mean, they're very much male dominated, especially once you start getting to the hospitals level. At primary healthcare, you do see more female representation. And I suppose it's also a function of who the providers of service are at those different levels of care, right? So I definitely think of social housing as a nice low-hanging fruit, particularly because when you start speaking to sponsors, and at any bank, we will always ask for that terrible word, skin in the game.
Oh my God.
Yeah, skin in the game. What? Right?
I mean, important.
That's a virus.
So again, if you look at social housing, you've got that consolidated capital grant, which is highly exactly. I mean, looking at 60 to 70%, depending on whether you're in SHI or ODA. So we definitely need to speak to Abolobua to say, your class and you, Shura, are going to be very important, I think, in this conversation. Because in my mind, and then again, from the SHI perspective, what makes it unattractive to most people is the fact that it's a non-profit company. But if one then again speaks about what incubation should entail, what a soft landing into a new space should entail, I think it's a good route to go, which then gives you a base to either graduate to an ODA or then move into affordable housing, where skin in the game stops being, say, 5-10% and now starts looking more like 30%.
Okay. Yeah.
Okay.
All right. And I know on that very precarious conversation of skin in the game, do you want to talk to us about maybe equity products that you as an organization have in place?
Yeah. So we actually refined our equity policy. This was in 2023.
Yeah.
And so the bank now can take direct equity position in what we see as strategic partnership type projects, where we see a lot of scale from a transformation perspective. And that transformation can look like infrastructure, an example being ICT. We feel that a lot more needs to be done from an ICT perspective. And it just touches on other infrastructure as well, right? Like, because when you start looking at education and remote learning, how do you do that when you don't have sufficient digital footprint and affordable digital footprint, which is very key from a South African context? Or with partners, when one talks about student housing, we've got that chronic shortfall in terms of number of beds available. And again, if one looks at who the beneficiaries are for student housing, the public universities, about 80% of students are Black, about 70% NSFAS funded. So that would be really impactful. So we do have an equity instrument that we can use to solve for some of that skin in the game. And then the usual, which we have been doing for a number of years, which is ring-fenced, providing funding for the BE participants who, after the project funds the underlying borrowing for the debt, then we look to take a reversionary position in the waterfall, as it were, from getting our facility repaid
out of the equity. All right. And I think another important question that perhaps someone of your position could enlighten us is around the risk measurement and kind of your risk approach to first timers or female, or just generally what's, how does the bank adopt an approach that's still inclusive in that sense?
100%. So we actually are encouraged to do it, because we actually have, in terms of mine and my team's performance, there's a KPI that speaks to we need to originate and fund Black-owned businesses. And if one thinks of our models, from a credit rating perspective, there's nothing in there that penalizes or rewards, whether it's Black owned or not Black owned. So it's non-discriminatory
in that sense.
In that sense, there the real push is on the project itself and how it stacks up from a cash flows perspective. If it's a project finance perspective, if it's a project finance transaction, or if it's a corporate finance or balance sheet lend, then it's a strength of the balance sheet and the existing cash flows to service that facility. So rather, what we do when we structure the transactions and we take a view on the sponsor is appreciating where the sponsor's strength is, and then seeing the rest of the team, who are the other parties, to then augment where we see risks. So that at a holistic level, we are covered that from a subcontracting perspective, that the construction firm has got 20 years experience, and so is able to come in there. They're able to raise the necessary bonds to
guarantee the project.
100%.
All right. You touched on student housing, and in my mind, I just thought of a time when we know cleaning services, right, came out, and everyone was literally starting up, a cleaning company. And I think before you know it, then that market, is overpopulated. We know that there's still, a demand. I mean, we saw beginning of the year in some of the schools, including your UCTs, where students were actually sleeping on the passages. Is student housing still an enough attractive, project from a DBSA perspective to finance?
Oh, no, it definitely is. I mean, if one looks at how the various property asset classes have performed, especially since COVID, housing and industrial have done the best over this period, right? And I suppose industrial makes sense because of the increase on online pushes, exactly, and warehousing, and residential more so than retail and commercials, because people have been
working remotely now.
Exactly. And even in the student housing space, you've seen the asset managers now moving into the space, diversifying from the other asset classes. Where before we felt that we were competing with the commercial banks, Eris now is in the space. Growth Point has become more aggressive in this space, and the yields have been very attractive as well. So yeah, there's still a lot of action in that space, and we take a lot of comfort as well with the stability that's come through with NSFAS. A new board has been constituted. I think in the last 2 months.
Yeah.
A new CEO has been appointed as well, because the challenge in the student housing space is the NSFAS and the certainty around the offtake and the payments. So once there's stability there, it makes it easy for the funders to then model whatever it is that the market needs based on what the risk or the perceived risk we see is. Okay. But it's just, we need to know from a regulatory perspective what the landscape looks like, and then we model for that.
Okay, so there's still quite an appetite for that type of...
There definitely is. I mean, the numbers are there. I mean, students are sleeping on pavements, like you were saying, and the universities can only accommodate so many students on campus. Yeah.
Sure. And it goes back then to that impact, because in as much as the owner of the facility is making money, but the beneficiaries become the students, and mostly the students from previously disadvantaged backgrounds are the ones who rely more on that accommodation.
Exactly.
Okay. All right. Okay, so we are going to move to close, and we have a question from the guest that we hosted previously.
Okay.
And it goes, what can the built environment industry do more to contribute towards sustainability in our environment? So reducing, our carbon footprint, reducing the negative impact of what the built environment contributes in climate change.
I think it can be the adoption of alternative building technology. In fact, I was at a conference last week, and Rob Wessler from IHS was speaking, and he had a different phrase for it. I completely forget what it was, but they called it something else. Yeah. But I think there's slow adoption on that, and a lot more should be done in that regard, especially for asset classes that aren't necessarily owned. I can appreciate the aversion that people still have in terms of their own personal homes. That I want my house to still be brick and mortar. But if you look at social housing as an example, I see absolutely no reason why alternative materials shouldn't be adopted there, because it's rental stock owned by the states and the provinces. Same thing for schools. Sure. Same thing for healthcare facilities. And often the pushback is that, but it's expensive. And yes, it is expensive if you only take a development cost view. And this is often the challenge when you have an operating company, property company model, and you've got different sponsors, because PropCo wants the cost of development to be as low as possible to get the highest yield. Yeah. Whereas OpCo could be happy to take a higher development cost upfront, because they know that from an operations and maintenance perspective, over the longer term, it's actually cheaper.
Okay.
Exactly. So then it makes for a higher yield. So I think from a built environment perspective, and maybe it's a study that can be done by SABIB, is to say, actually, is there room to debunk, some of that thinking that it's more expensive upfront?
Yeah.
So are we still seeing fewer than funding applications where they are adopting these alternative methods?
No, we are. Some of the challenges that our sponsors also speak about in terms of if they want to get a Green Star or IFC-H certification is the cost of getting that certification. I mean, I was in Cape Town about 2 months ago looking at a project that deals with backyard developments and rentals, and they want to get that accreditation. But how it's positioned right now by the Green Building Council, my understanding is that it's about 175,000 per unit, and for a scheme, which is no, that's the cost of getting the accreditation. Okay. But for a scheme where a unit to develop is 250,000 rand, that then isn't feasible. So even like, I suppose, policy, regulation, the bodies that want to drive this behavior, we need to start thinking, how do we make it affordable for people to buy into it, so
like
that we can...
what green bonds are or those type of products?
Yeah, from a funding perspective, exactly. Where then as a funder who then subscribes to a green bond, I'm happy to take a smaller coupon, a smaller return, because I appreciate that I'm trying to drive a behavior that speaks to sustainability. Yeah. But then you want the whole value chain, right? To start having that appreciation. So that it starts at development, of a project. You're already having that thinking in mind that if you want to get that accreditation, they'll appreciate that maybe for like this band, development up to this quantum, we then more concessionary in terms of how we charge. Yeah, but I think there's a lot that still can be done in the sector in driving that conversation. Yeah.
Absolutely. And I know that was meant to be the last question, but for anyone who's listening and is thinking, actually, I have a product that I would like to bring to the DBSA. And sometimes people will look at, the DBSA and think, well, I'm not that client. I'm not their client. When they think about, finance, they're thinking traditional banks, or they're thinking like smaller. So who is a typical DBSA client?
Okay. So I'll speak for social infrastructure and, of course, the property finance space, which is the one that we are all in, right?
Yeah.
We play with both emergent players,
Sure.
because in this country, with our history and us wanting to be part of the transformation narrative, we appreciate that that's a role we have to be very intentional about doing.
Yeah.
So if you are a first-time player in this space, but have got experience, and so typically we see people who've got a financial background experience, or from the built environments, or delivery of healthcare, if it's for healthcare infrastructure or education, very happy to talk to you. We have a comprehensive due diligence checklist that we share with our applicants, so that we have an appreciation for what we would be considering in looking at a project. In terms of amount, people always think we look at these big ticket sizes, and we can do. I always say that, we can go up to 1.6 billion in terms of conditions. So that's the scale, right? But I mean, in social housing, we know that the ticket sizes are small. So there we've looked at projects for 25 million. Okay. The smallest project we funded is 20 million. But we also have partners like the NHFC. TAF is also a client of ours. So if it's more aligned with NHFC or TAF, we are able to also make those introductions for our clients. I mean, the feedback that I've received is that, and I got this a lot about 3-4 years ago. I've been in this role now for almost 6 years. Is that, there's a face. So my team and I have been very also intentional at being at the conferences, partnering with bodies like yourself, so people know that you actually can get a hold of a Palesa or a Lorna or a Happy at the DBSA. It's not just
a title.
Yes,
Okay. Well, that was awesome.
Yes, I couldn't agree more. Thank you, Palesa, for this insightful chat.
No, and thank you very much for the opportunity, and looking forward to having more conversations like this, and not only when it's International Women's Day.
Absolutely, absolutely. And thank you for sticking out with us and listening to the conversation. We do hope that you were inspired, educated, informed. Now you know that the DBSA is open for business. So if you've got a project that requires funding, don't be shy. Nangu Palesa. Thank you. Bye.
Thank you. Bye.